It was a wild session on Wall Street, but the moves actually began earlier in the week when we started to see stocks in certain industries that had been out of the limelight begin to perk up. It began as a trickle on Monday, and of course today became an avalanche. And now there were numerous factors culminating with this extraordinary session, and I want to start with today's massive sell-off in technology. These stocks had been on autopilot for a long time, so it's easy to see why shorts, people who bet that markets go down, they actually try to force them down, wanted to pounce. Of course, it wasn't enough to go short, but to have a platform to promote a certain kind of fear was also necessary, and that was the story with NVIDIA, which got raked over the coals by a well-known network, a different financial network, by a well-known short who was allowed to just beat the company up. Although this stock has been, this particular short has been wrong in general a lot of times, but specifically with NVIDIA, it didn't matter. And it didn't matter for the stock, which began to give up gains. And then, of course, selling triggered more selling. And as NVIDIA began to free fall, selling spread to other high-flying tech names as a general epiphany sort of struck traders who maybe some did want to take profits. Now, you start to couple this with a legitimate report from Goldman Sachs that compared what they're calling the FAAGM names, right? I don't know how you pronounce that one, but these are stocks right now, the big tech names, to bubble names from 2000, and they're suggesting that there are reasons for us to be worried. Well, investors fled these names, which, of course, are up huge in the last few years. And this is the great part of the story. Those investors didn't run for the hills with those gains. Instead, they put that money to work in blue chip names and value names, and that lifted the Dow Jones Industrial Average to an all-time high. Now, here's the Trump part of the story. It was a great week, by the way, for Trump stocks. The White House touted this as infrastructure week. And while, listen, those plans were drowned out by all the mainstream media search for sensationalism, the market was listening. Take a look at these names that will be huge infrastructure winners. Vulcan Materials, Martin Marietta Materials. Then there are the financial names, including regional banks. They continue to act great. A big assist, of course, given to them by Republicans in the House, finally beginning to dismantle Dodd-Frank. And then there was President Trump's visit to the Queen City this week. Cincinnati-based Fifth Third Bank saw its shares rally 3% today, 6% for the week. And, of course, there are beaten down stocks. Well, you know what? Maybe they're just oversold. Even bad stocks can be oversold. Department store stocks went through the roof. Of course, Nordstrom's kind of got the whole thing rolling when they talked about going private earlier this week, but you had other big winners, including Dillard's, up more than 6% for the week. So here's the bottom line. You must always have a balanced portfolio, okay, because with the best names in several sectors, and a lot of times you want to be in sectors that are not hot, because that, as today proved, right, what's not hot can become hot, and what's cold can become hot. So, in other words, don't always chase. In fact, the rest of the market, in my mind, is starting to break out. The Dow made a new high today. The Russell 2000 made a new high today. That is great news for investors. One of the areas, though, you've got to be in, those infrastructure stocks, that dirty fingernail report I told you about, a lot of those stocks took off today. So go to wstreet.com for that.